Hello and welcome to our webcast. I'm glad you're able to join us today. I'm Amy Pendergrass with Moss Adams, and I'm going to get us started for today's session, Leverage Internal Audit to Achieve Organizational Goals. Before we begin, I'm going to play a brief video.
Welcome, and thanks for joining us. We're pleased to present another in our ongoing series of continuing professional education webcasts to help companies and individuals conquer challenges as they plan for what's next. Our presentation will start in a few moments. Before we begin, here are a few things to keep in mind. You can customize how you both view our presentation and interact with the presenter. For better viewing, close all other applications and turn up your speaker volume. You can also adjust window size and placement or enter full screen mode using the controls at the top of the window or dragging the bottom right-hand corner to resize. At the bottom of your screen, you'll see a series of icons, each relating to a different aspect of our session. You can download the group attendance sheet and a PDF copy of today's slides from the slide deck and handouts widget to the right of the slide view. You can ask our presenter questions during the webcast by typing a question in the Q&A window below the slide view and clicking Submit. We'll do our best to answer all questions during the presentation or follow up via email. If you experience technical difficulty during today's presentation, refresh your browser by hitting the F5 key. Today's session will offer you 1 CPE credit. To receive credit, you must meet the requirements as specified by the National Association of State Boards of Accountancy. You must attend at least 50 minutes of the session and respond to at least 75% of the polling questions, which we'll ask throughout today's presentation. To respond to a poll, click the button next to your answer. We'll track your progress and alert you when you've earned CPE credit. You can then click the certificate icon in the CPE Progress widget to open a PDF file that you can save to your computer. Don't worry if you can't download your PDF certificate today. We'll email a copy to you in 2 weeks. If you're attending this webcast in a group, you must complete our attendance sheet to receive CPE credit. The attendance sheet is available in the slide deck and handouts widget. Please have all group members sign it and send only 1 sheet per group. Also note that CPE credit can be awarded only to participants registered as themselves and isn't available to participants who view the on-demand version. As a reminder, the presentation you're about to see isn't legal, investment, or accounting advice. We encourage you to seek the counsel of a professional service provider to apply this content to your specific circumstances.
All right, and now I would like to introduce today's presenters, Colleen, Rozillis, and Mark Zurenka, both partners here at Moss Adams. Their bios and contact information are located in your webcast console if you would like more information. And now I would like to turn the floor over to Colleen to get the presentation started. Colleen?
Great. Thanks, Amy, and good morning, everyone. So today we're going to talk a little bit about internal audit, but really we're going to talk about how to make organizations operate more efficiently and effectively through a collaborative and constructive internal audit relationship. And our goal is to give you some tools and techniques and knowledge about reducing risks, strengthening controls, and enhancing performance through the internal audit function. We always like to include just a little bit of definitional information about internal audit and thinking about why. Actually, yesterday I was in an audit committee meeting and one of the Finance and Audit Committee members actually said, wait a minute, don't we already have an auditor? What's the difference between our financial statement auditor and our internal auditor? And so we had this discussion just yesterday afternoon. You know, there really is a difference between what's happening with your annual fiscal audit and then what happens with internal audit, where we're looking at what are our internal controls on a regular basis, what are our opportunities to improve our performance, being a steward of our funds, being accountable to our constituents, to our community, to our employees. We can be objective and independent, but we're also collaborative and constructive, and we're working on what are our goals for an organization as a whole. It's a best practice for all organizations to take a look at internal audit and really thinking about how we can align internal audit with strategic goals. So we want to work with financial audit, but we are working all year round. We're not just coming in once a year to say, how are we doing financially, but we're really looking all across the board at our performance. So today we're going to talk about the components of internal audit from a holistic perspective. We'll talk about those proven approaches to put together a holistic internal audit program. And then we wanted to spend a few minutes just talking about how internal audit and how the world has changed since COVID. And there are a lot of folks in our webcast today, so we're going to take some time for questions. So make sure you use that Q&A box to do that. And Amy, we've got our first poll.
All right, thank you. So our first polling question is, do you have an internal audit program? A, yes, or B, no? And we will give you a few moments to respond. To respond, you will need to click the button next to the answer you choose and hit submit. And then if you can't see the submit button, you will need to just enlarge your slide area. And I do see some people responding to the poll using the Q&A window. You will need to respond on the actual slide itself in order for it to qualify for CPE. All right, here are the results.
Okay, so we've got more folks with internal audit than not, so that's great. So this will be really interesting as we kind of go forward to hear about your perspectives for those of you who do have internal audits. I'm really looking forward to the Q&A portion of this one.
All right, so we're going to start off with talking about components of a holistic program. Really just think about how do we set you up for success. If you have a program in place, maybe how can you up-level it and, in essence, get more value, more return on investment on it. And if you don't have one today and you're thinking about how can we make it, how can we give you ideas to really form a good approach to it. And in terms of a holistic approach, really we're going to focus on at first here 3 components. First is how do we make sure you have the right inputs, so the right information to work with, to really take a broad, holistic, really a value-producing approach to your internal audit program. The second will focus on what should you be addressing with the internal audit program. And it's kind of, we're going to be talking about sort of the historical, very compliance, very controls focused with, I would say, relatively surface level risk assessment to a much more comprehensive program with performance as a key element, so that it's really giving you the opportunity to touch every facet of your organization and really moving internal audit from something that maybe is felt necessary evil to something that's actually a productive, value-adding component of your organization. It's a place where you could go to get things done, get things fixed and improved. And then, especially for those folks who either are board or council members or committee members, call or thinking from their perspective, how do we make sure that we're demonstrating the value, that we're not just going through the motions and doing things, that we're actually making an impact on the organization, and how do we demonstrate that to those making decisions. So the first is program inputs. And really we're going to focus on 3 elements. And the first is going to be what we'll call enterprise assessments. That's really gathering, I'll say, the factual information and understanding the landscape of the organization so you can determine, hey, where should we place our focus at the most bang for our buck? Sometimes that's early wins, sometimes that's big sort of scary projects, but it's where are we going to make the biggest impact on the organization, and how you do that impact can vary from year to year. The second is, how do you get all of the stakeholders, employees, and others involved in the process so you're doing it with them and not on them? Because if they feel like you're doing it to them or on them, then you're not going to get nearly the impact that you could. And then what role can performance metrics, which typically aren't thought of, and one reason because we're often not even thinking of performance as an area of focus for internal audit, but how can we tie your internal audit program strategically what you're trying to accomplish in an organization so that it is always helping you become, reach your goals and become the organization that you aspire to be. So real briefly on each of those. So enterprise assessments, even though we have sort of 2 columns, I want you to think sort of 3-legged stool. The first stool is a risk assessment. And we've all seen heat maps, right? And often a heat map is the risk assessment sort of deliverable. And you might say, well, that's colorful, informative. What does it really tell you? So when it says, just picking the top one, asset management capital program is in the red, it's a high risk. Why is it a high risk? What can you do about it to mitigate the risk? And so we'll talk some in this webinar about how to do an informative risk assessment that is both comprehensive across the organization, but deep in that it's giving you the insights so that anyone at any level, board, council, audit committee, staff, could look at the results of the risk assessment, understand why this is a high, medium, low risk, what we should be focusing on to reduce the risk, et cetera. So that's truly informative. The second leg of the stool, right on the right column, internal controls. So often internal controls should be is one of the areas looked at within a risk assessment, but internal controls is part of the foundation of the organization. So really sort of taking a similar deep dive, but comprehensively across the organization on your various key internal controls to assess that landscape. So not only as a risk assessment to help you prioritize where to focus, but on internal control review, where to focus, where you're strong, where your things are in progress, and where there are, so you say, okay, really, these are areas we need to focus because we need to fortify. But again, we're trying to collect the information that if you feel like you put it on the table, say, we can collect a really good decision about what things we want to accomplish each year of our program. And then the third leg of the stool, sort of hidden in here, is performance. And the reason it's hidden is because, for example, when we conduct enterprise risk assessments, we're looking at performance just as much as we're looking at risk. So we're looking at, in each of these functions listed under enterprise risk assessment, how can we operate more efficiently? How can we operate more effectively? So that we're able to bring that third element sort of onto the table in terms of here's how we can move the organization forward from a performance perspective. So again, all that, lots of information, then develop your annual or multi-year internal audit programs and feel like you have a good plan for chipping away at making progress. The second component or key input is stakeholder. I mentioned before, it's imperative that you get them involved, I'll say sort of early and often in the process. Often we hear when we're presenting to a board or a council, ask the question, if I spend $1 on this, what kind of am I going to get? You don't want to be just trying to convince them of that. You want to make sure that you're involving them in the process, that when you're conducting your risk assessments, you're getting their input, you're understanding their priorities, you're understanding their pain points. With management and staff, you're talking about how can we help you improve what you do? Can we make it fast, more efficient, less risky, less painful, so that you're working together? And then you get those external, depending on the type of organization, whether a bank, a credit union, a tribe, getting that external perspective of how your organization is viewed, how they interface with your organization, how do they see opportunities for improvement, so you can put that into the equation. And then, of course, speaking of internal audit, relevant regulatory compliance bodies that we may also want to get from, which can be from past reports, it can be reaching out to key people, et cetera. You want this, you want it well informed, and you want the participants engaged in the process, all of which will pay dividends for a successful program. And then the last piece, performance metrics. Often forgotten, often not sort of to this process, which is ultimately, where is the organization trying to get to? What is its strategic plan? What are its strategic goals? And how can an internal audit program help move you from point A to point B? And yes, we think of it again in terms of internal control, compliance, and the things that we do, but where are the performance improvement opportunities? Where are the revenues not what we want them to be? Where are the costs higher than responses be? Where do we have pain points we're not able to process things efficiently? Building permits, dealing with homelessness, customer service and response time, all things that are key inputs that can come from your business strategy. Say, hey, in internal audit, we can up our sleeves. We can work with the organization to identify how is it working today, how can it work better in the future, how can we draw from how peers are doing it, leverage best practices, and improve organization in those manners, so that in everything we're doing, again, we're taking a holistic view of the organization and moving you forward to achieve your goals.
All right, so as we're conducting these assessments, as we're working with our clients, we've identified quite a few opportunities in the marketplace that we wanted to talk about today. And the first is, when we're conducting those risk assessments and what we're seeing today, absolutely it's succession planning and workforce planning. The Great Resignation is absolutely real. We are thinking about, we've heard about the silver wave, right? And that's been threatened, I think, since the last recession. And it really hadn't come to fruition until the pandemic. And in the last couple of years, what we've seen is as folks have started to come back to the workplace, people who were eligible for retirement or close to retirement, really realizing, hey, I don't want to go back to the office, right? We've had people come back and realize, I don't want to commute anymore. People thinking about their jobs and lives in a totally different way, as well as there being, just a very tight labor market and the opportunity to switch jobs for pay raises, for lifestyle changes, people who have moved over the last 2 years, and just a huge shift in how organizations have operated. And as a result of that, there has been a really high level of turnover in many of our clients, particularly in the public sector. What we have seen at the management level is that there are just plain more jobs than people. And because of that, we really need to focus on succession as that risk. If we don't have documented policies and procedures, if we don't have those kind of key relationships with our community members, with our key partners and stakeholders identified, when those people leave, they often leave with so much institutional knowledge that it puts us at huge risk as an organization. And that tends to be very high up for all of our clients. Another area, and these two kind of go together, is really related to our infrastructure. How are we managing our assets? How are we managing our infrastructure, our capital program? The average building in America is over 60 years old at this point. I guess maybe it's sort of succession planning for our fixed assets at this point. But really thinking about how we're planning for all of our infrastructure. There has been quite a bit of money coming out of state and federal governments over the last 2 years to help out with capital planning and programming for a lot of public and not-for-profit higher education entities. But that we have to have the infrastructure to be able to do that. And so that means we have to have really good planning and programming for our capital programs. It also means we have to have very strong procurement policies and procedures and capacity in both of those functions to actually be able to get these things out the door. And so that's an area where a lot of our clients are a little bit further behind because our internal services tend to be the last area where we add staff. And that can create a lot of risk for us in an organization. And so really thinking about our ability to address that deferred maintenance, which, as we all know, it costs a lot more if we don't stay ahead of our preventive maintenance to do a full system replacement. It's always been my dream to be able to cut a ribbon on, a roof replacement or an HVAC system, as opposed to having to only do ribbon cuttings for new infrastructure. So for all of you on this webcast today, maybe we can all join up and do that someday as our next big social movement. But one of these days, we'll all be working toward much more proactive maintenance. And then, cybersecurity. Cybersecurity and just technology infrastructure in general is a huge risk for every organization. For any organization that has private data, obviously it's a risk. For government clients, it's a really high risk because there's just so much private information that's there and they're very attractive to hackers. It's an increased risk every single day for all of our clients, and so it's something to very much look into. It's also one of those areas where we basically, no matter what sector you're in, you're competing against, you know, the most competitive employer in the marketplace, because there just are it's such a competitive job market. And so it's hard to stay competitive in terms of staffing. And so there's often really high turnover in terms of cybersecurity professionals in particular. And so really being able to staff and have that consistent program, those policies and procedures, making sure that you're on top of that is very, very important. And then governance, making sure those folks who are charged with governance for your organization understand their roles, are at the right level, stay at that policy and strategy level, and are really keyed into guiding the organization at the appropriate level, are not too in the weeds, are not checked out, and are not a rubber stamp board. Having effective governance sets the tone for the whole organization, and that can really be an area that can throw off your day-to-day operations, you know, in an instant. And so having effective governance is really critical to effective performance, controls, and compliance, you know, all throughout. Any organization that has low-risk governance, we find tends to be a high-performing organization.
Yeah, and then in terms from a controls perspective, really, if we had a more interactive session here, I'd be asking about what do these common, and that's kind of what I'm going to address this list. And what they have in common is that they're traditionally primarily decentralized activities, so activities that happen across an organization. And that's not a criticism, it's understandable that they are, but it's what are the risks and challenges that presents when you have activities like these being decentralized, and what can we do about it? So typically the opportunities for improvement, we'll take grants management as an example, is that, okay, we have grant activities, applying for grants, managing and administering those grants in different facets of our organizations. But are we doing it consistently? Most often not. Do we have common policies and procedures on how we want to do that in place? More often than not, there are not. Are we working together to leverage the different facets of the organization, maybe making a grant application stronger? Often we're not taking advantage of those collaboration opportunities. Are we having someone who's overlooking all of these granting activities and sort of keeping an eye on them, monitoring, doing training on them relative to policies and procedures that may need to be developed? So the theme there is, okay, how do we gain consistency, some standardization? I mean, different grant programs are going to have different requirements, but there's going to be a lot in common, more in common than different. And so how are we getting our arms around this and managing as an organization as a whole? That doesn't mean centralize it, but give it some benefits of centralized focus. Again, policies, procedures, training on those policies, procedures, some monitoring. The same can go from purchasing. If things are fully centralized in purchasing, often we're finding bottlenecks, and so we're often allowing facets of the organization to purchase up to certain levels, very understandable. But how to make sure, again, that that's happening consistently across the organization. Here we typically have better policies and procedures in place, but how well are we monitoring that that's happening? Cash handling, that's sort of at the extreme end of inconsistency across the organization, especially in a governmental program, tribal programs where we're providing a lot of services. There's cash taking place at events, social events, community events, and happening very differently. Are the dollars large? Probably not, but is the risk exposure high in terms of loss? Yes. Accounts receivable, the classic question is to a client, what is your total accounts receivable across the organization? Often that answer is difficult, if not impossible, because those activities are happening, again, centrally across the organization. We all assume they're funneling up through finance, and often they are, but often they're in multiple systems, and getting that information sort of at your fingertip at the push of a button is not in place. And so then we have opportunity to do much better in that regard. And Colleen already touched on technology, but thinking about it in terms of, and if we run out of time talking about COVID, how much more remote and virtual we went as a result of COVID, and that taught us a lot as organizations that was really beneficial, but to what degree did we implement controls in that new environment? And if we did implement controls, for example, then did we codify those? Did we develop policies and procedures so that now when we lose someone they go to another job, they retire, they're on vacation, how do we know that those new processes, those new controls are in place? So again, here the opportunity, thinking of decentralized activities across the organization, and how do we get our arms around them to perform them more consistently, more efficiently, more effectively across the organization.
And from a performance perspective, I think at the very top for our clients that are in that kind of public and social sector realm, it's that we have seen a huge amount of shifting priorities from our stakeholders in the last couple of years. In the not-for-profit and the private sector even, we've seen a big push toward ESG. We've seen a really big push toward that values-based investment and expectation from our stakeholders, from our constituents. And in the government space, we've seen our residents and our community members really asking for us to respond to things that we haven't maybe traditionally responded to at the local level. So things like climate change, things like homelessness, that maybe at the municipal level, our organizations haven't necessarily had the infrastructure to respond to, and figuring out how to do that in an effective way. We've also had unfunded mandates, things like that, to really be able to respond and shift accordingly outside of that, historical environment when things were really status quo. The other piece is to really just think about service efficiency. So while we have been going along and trying to do our work as efficiently and effectively as possible, the world kind of keeps changing and expanding, and we have to figure out how to operate as our fixed costs go up, right? And typically our revenues are not going up as much as our fixed costs are. So figuring out how to do things more effectively, and that applies across every single organization. And so that's a really great opportunity for every organization, and an opportunity where internal audit can absolutely help figure out, what are ways that we can do things better as we kind of dig into our work. Policies and procedures are a huge opportunity for every organization. We often find, updating our policies and procedures is kind of the first thing on your to-do list on a Monday morning, last thing that's not done on your to-do list on a Friday afternoon, right? Because you need dedicated time to do it, you need dedicated headspace, and all your fire drills and meetings during the week get in the way, and then it's 5 years later and you haven't updated that policy and procedure. But without an updated policy and procedure that, makes sure that we're kind of, we're matching up to our current business environment, that we're compliant with current laws and regulations, that we have all of our ducks in a row, that we can't really hold our teams accountable, right? And that we also are in a situation where we have the ability to potentially, when folks leave, we lose that knowledge, but also we have a huge risk of losing our compliance with anything that we might need to be compliant with. And, we want folks to be doing things the way that we want across the organization. We want our work to be consistent. We want our work to make sure that we are collaborative across the organization. And that's really important, particularly for our internal services and our financial transactions. And so making sure that we are checking up on those, making sure they're updated every 3 to 5 years is really important. It's a key area for our internal audit team when we come in and when we do those enterprise assessments. And then we're always kind of checking up and making sure that they're aligned with best practices. Financial transparency is a huge area of interest from community members as well as employees, really thinking about how are we performing as an organization, as well as communicating up to our board and out to our community about how we're doing and where we're going. and that is an area where we can use KPIs, where we can use dashboards, and where we can really perform in terms of how we use our budget as a communication tool as well. And then finally, employee engagement. So going back to that top risk area around succession, around workforce planning, the more that we engage our current workforce, the more that we really think about our employees and learning and development, our DEI programs, our ability to engage folks, to keep them, giving them stretch assignments, to keep folks interested in their jobs and to keep them connected to their jobs and on a growth path. That's going to keep them in our organizations and much better connected to our organizations.
Okay, tracking and reporting. So really thinking about areas here. One is, how do we document and keep track of everything that we're doing in an internal audit program? Because you can have lots of moving parts. So one is just understanding and tracking what we're doing. The second is being able to have accountability and reporting that we're actually getting things accomplished and demonstrating that we're making progress when we're identifying findings, that we're closing findings, what have we fixed them. And then the third is making sure that you're demonstrating, back to that board or council person's question, that ultimately will come. And so here's just a brief example of one way, and it's not so much about the details and what's being tracked here, but I'll mention a few things. So each of the internal audits that you take on, list on the left, how many findings do you have in each of those? How many of those findings have been addressed or completed? In some cases with clients, internal audit does a validation. Okay, we had this finding, for example, an easy one, this policy isn't in place, the policy developed, the validation is, yes, the policy has been developed and adopted by the appropriate people in the organization, and did the policy actually address what the finding had defined as a shortcoming. And then being able to communicate to your audit committee, to your board or council on a periodic basis that we've taken on these internal audit projects, we've had findings, we've completed them, we're making progress, we're getting things off our list. Ultimately, then being able to demonstrate how the organization is improving. Usually one of the most effective ways of doing that is not having internal audit presenting all of this information, but also having your leadership from across your organization. So for example, if you did a purchasing performance audit, have your head of purchasing come in and present, okay, here are the things that we've done to address the findings. Here's how we viewed the findings. As far as the findings, having good recommendations. Ideally, because you're working with the stakeholders, those recommendations are very practical and able to be implemented, but sometimes management views those recommendations a little bit differently. So we like the idea, but we're going to tackle this a little bit differently.
All right, and I'm going to take us into the next section, but first we've got a poll.
All right, thank you. So our second polling question is, have you conducted an enterprise risk assessment within the past 3 years? A, yes, B, no, or C, I don't know. And then also as a reminder, if you would like to receive CPE credit for today's webcast, you will need to respond to at least 3 of the 4 polling questions. And it looks like most have responded. So here are the results.
Okay, so we've got a pretty good spread here. A little less than half have within the last 3 years, so that's a best practice. And then we've got a good split between no and I don't know, and that's pretty common. And you know, a lot of folks pause enterprise risk assessments during COVID because so much was up in the air that it was hard to say what's at risk. Everything was at risk, right? So we'll go through how we put together a holistic internal audit program. I'm going to start with risk assessments because that's really the core of how we develop an internal audit program. And we develop our overall risk level by looking at a couple of key areas. So we develop that overall level first by taking a look at that potential impact that a negative event could have on an organization. And that impact can range from, not very much of an impact to very significant impact. We also look at the likelihood of an event occurring. So that could be something, for example, in the safety area of, say, an earthquake occurring. So I live on the West Coast, so an earthquake occurring in some areas, in California could be more likely than maybe in the Pacific Northwest where it's less likely, but the potential for it to be catastrophic might be different in those areas. So we take those types of things into account when we conduct a risk assessment. We also want to think about the preparedness of the organization. So we want to give you credit for what you have done. And that's really important also as we go through this process, not just giving you that heat map as a deliverable, because these reports end up living without context, and we want to make sure that you do get credit for the work you are doing to mitigate risk, because we don't want folks, especially your board members or members of your community, to see this without context and think, oh my gosh, we're high risk and we're not doing anything. There is a lot of preparedness activity that happens on a regular basis to mitigate risk. Next, you want to think about a risk trajectory. So we could have a high risk item, but you're doing a lot of work, or the external environment is impacting it differently, and so that risk level is decreasing. You also could have a lower risk area where your risk is really increasing, for example, in organization and staffing over the past couple of years because of the Great Resignation. That's a very good example of that. And so we want to make sure, because we're all resource-constrained entities, we can only dedicate so much of our resources in so many different areas. Where do we want to target? Then we talk about our residual risk. So we live in an environment where nothing that we do has zero risk, right? Every time we get in a car, every time we walk out the door, there is some risk to living in the world. Every single organization has risk just operating. And we all have different risk tolerances as organizations as well. And these are established in part by our risk management, by our leadership, by our governance. But it's important also to think about for each of these categories what that residual risk is, because in these categories, we're never going to get to zero. In some of these categories, like technology, we might always be higher because of that external environment and because of those threats. And again, we want to provide that context. So then we provide those risk mitigation strategies. Those can be steps that internal audit takes. Those can also be steps that the organization takes internally to mitigate risk. So this is an example of what one of those deliverables looks like. This was a recent result for a local government that we did. So this shows those risk categories that apply to that organization. Our risk assessments typically have between 15 and 20 risk categories, depending on what that organization does and what their risk profile is. And we show the highest, that overall risk rating, and then all of those inputs across the board. So this is that heat map, and then the detailed results go in kind of further. But what you see here is really kind of that makeup of all of those pieces that then goes into the highest level. And because this was conducted during the pandemic, you'll see that external environment is the highest risk area. So that definitely makes sense for where we are now. We also always conduct an employee survey as part of our risk assessment, and this has kind of two main pieces. One is that there's an educational element to conducting an employee survey. When you're doing a risk assessment, you have the opportunity to engage everyone in your organization, or at a minimum, your kind of supervisory level and above, in educating them a little bit about risk, talking about some definitional elements about risk. We build logic into the surveys so that, folks who are involved in procurement, for example, get more questions about procurement. Making sure that we get folks engaged in these questions and get some knowledge out about what we're doing as part of this process. The other piece is then we can identify areas where there are disconnects between internal audit assessment, management's assessment of risk, and employees' assessments of risk. We never use employee survey results to actually include in our own risk calculation because employees don't think about risk every day. We think about risk every day. So as you can see, employees' risk is almost always less than our assessment of risk is. But what it can do is help us to identify areas where we need to do additional education or where there might be some red flags. We also do a lot of open-ended responses in these areas, and so that allows employees a confidential and anonymous way to identify areas where then we can start to follow our nose. And I think that that can be really helpful for the whole organization to be able to help them build out that internal audit work plan, identify areas where we want to look a little bit further into things. So Amy, we've got another poll.
Okay, so our third polling question is, where do you feel the greatest risks are in your organization? A, capital program, B, IT and cybersecurity, C, human capital, D, governance, E, external environment, or F, other. And then as a reminder, the polling questions are located right on the slides that we're presenting. So if you have trouble seeing it, you will maybe try hitting F5 to refresh your console. We'll leave this up another 5 seconds here. All right, here are the results.
Okay. So not a surprise, IT and cybersecurity came in first and human capital came in second. That tracks with basically what we're seeing across the organizations that we work with. Mark, do you have any thoughts about these results?
The only is that capital program is on the low side, and that is that on one hand that's not surprising when you compare it to the other topics. However, it's very consistently an area of high risk or high concern, I'll say, of boards and councils. Continuing on proven approaches. So I remember one of our clients, they said, you know, I need another finding like a hole in the head. And that's kind of a good talk about, you know, in internal audit, findings are not what they are in external audit. And in fact, sometimes we findings, observations in internal audit. They're not a bad thing. What we view findings internal audit is opportunities for improvement. But what it can also mean is that you are typically going to have a lot of findings in internal audit than you are in external audit. Because hopefully in external audit you have none. And so when an audit committee or a board or a council sees a list of findings from a particular report, to Colleen's earlier point, is like, we don't want them reacting. And so part of it is, how do you make addressing those findings manageable? And so instead of looking at a list of however many findings, types of findings that are represented in what's been identified. So what are some simple things, you know, you can knock off and get done? Things that are tied to policies and procedures, which you might be able to address in the short term, or maybe, which would be very typical, become part of a longer term program to update and solidify policies and procedures. What things, for example, just require some training to make sure that, you know, understanding what needs to do. There are things that are possibly to a new ERP. Lots and lots of our clients are going through new ERP systems, and often you're going to wait till you have a new system in place to really address a control that has a strong systems element to it. So helping your decision makers understand the type of the findings, categorizing them, putting them in buckets so that it becomes much more digestible, much more understandable to them, so that, again, they're not overreacting in a bad way, they're understanding in a good way what the meaning of these findings are and how the management team is going to go addressing them and when. So really just laying out a roadmap for them.
All right, and so finally, let's talk about KPIs. Internal audit is actually a really great place if you don't have KPIs established in your organization for them to start from. And we've been involved in establishing KPIs for quite a few of our clients, and that's because you've got access to a lot of data across the organization and connections across the organization. And so it's a really good place to really kind of incubate that program and maybe eventually hand it off to, another executive office. So as Mark mentioned at the beginning, we want to make sure that we tie KPIs to the strategic plan. We also want to think about monitoring and measuring our performance really at different levels of the organization. So what's important to look at across the enterprise? What kind of small set of KPIs have that value across the enterprise versus what do we want to look at a departmental level? What's important to look at for those kind of direct services that we offer? What do we need to talk about to kind of look at our day-to-day performance? And in a high-performing organization, what we see is also that individuals have performance metrics that are linked to the strategic plan. They see where they fit in terms of our organizational goals and our organizational values. It might just be kind of one or two, but we see kind of how we're tied to the outcomes of the organization. There are usually three types of KPIs. Financial KPIs, so those things that are really tied to your budget, to your financial performance, and your financial ratios, easy to benchmark. You want to have a couple of those in place. You kind of see where you're going and how you're doing. Your operational KPIs, those are those things at that individual and departmental level, those things that might be kind of workload and output measures. But really, we love to focus on those outcome KPIs, and Mark mentioned that at the beginning, those things that are really tied to what we want to achieve. When we report on outcomes, we also want to talk to how much we can control about these areas, because sometimes we only have, a small amount of control over the actual data or the work that we're reporting on, but it's still really meaningful to our stakeholders, to our collaborators, to our community, and it does have value to our organization. And so we want to provide a lot of context around why this has value, why we're reporting on it. And so I love to see a performance dashboard where you can actually kind of drill down and say, what is the definition of this metric? What does this mean to our organization? What is our target and how are we tracking against it? When we develop a KPI, we like to pull 3 to 5 years of sample data and actually see how we're trending and where we're going, and is this actually meaningful to us before we kind of finalize it. And sometimes then we learn, hey, this KPI actually isn't the right one for us, and we go back to the drawing board. And Amy, we've got our last polling question.
All right, thank you. The last question is, does your organization have an ethics hotline? A, yes, or B, no? And while you're responding, if you would like a copy of today's slides, you can download them from the folder that says slide deck and handouts, but we'll also be sending them via email tomorrow along with a recording of this webcast. All right, here are the results.
All right,
okay.
So let's say about 60% are yes, and kind of the way here is hopefully you don't just have an ethics hotline in place, but you also have what we call a waste and abuse program, which I'll talk about in a minute. And I would say yes, an ethics hotline is a best practice. I'd also say that some organizations kind of feel like it's the bane of existence, or they're worried about setting what up they're going to get flooded with. We have never honestly seen that to be the case. But what I'd like to get you to think about an ethics hotline is, it's just a conduit for having what we call a fraud, waste, and abuse program in place. And by fraud, waste, and abuse program, we just mean educating your organization about what fraud, waste, and abuse is, so they have an understanding of it, and so that they understand that that is actually the purpose of an ethics hotline. And they are thinking about fraud, waste, and abuse, and both for themselves and how they conduct themselves, but for the individuals around them that they work with. Because in reality, ethics hotline and a fraud, waste, and abuse program are about prevention, not detection. If we're putting them in place for detection, which is how we commonly think of it, yeah, that's sort of all well and good, but really you're putting them, because you don't want these things happening. If they do, you want to detect them, but in reality, you want to prevent them. So educating the organization about these topics, providing training from the board and council all down is what's going to give you the benefit and what will actually, I would say, truly make it a best practice, because now you're improving the organization, you're helping it operate the way that you want it to be versus putting something in place that might be a conduit to catch someone doing something. It's that sort of philosophical difference of what's the role of an ethics hotline. And then the last sort of proven approach and things that we've been talking about is just to help you when you think about your internal audit program, what's going to help make it the most successful it can be. Is the last one is what we kind of call a sustaining philosophy. If internal audit is viewed as that necessary evil or that classic, here comes the internal auditor, hide, then I would sort of say, why bother? Because you're not going to get the traction, you're not going to get the value of having the program in place. And so the couple ways we think about it is, yes, internal audit needs to have objectivity and independence, and that can be in-sourced or outsourced. The one is not better than the other necessarily from that perspective. But that doesn't mean that at the same time it cannot be collaborative and constructive, meaning you're working together to make the organization better. And yes, are you in the very small percentage of the time going to encounter things that are bad and uncomfortable sort of for everyone involved? Yes, it does happen, but it's for sure, thankfully, the exception to the norm. And the norm is more of we're identifying opportunities for improvement, how to help the organization do whatever that is. And if you take that approach, then internal audit becomes a valued part of the organization, again, that helps you get things done, helps you improve, versus something that you're trying to minimize and fear. And then just the last element of that, obviously we're talking about throughout, is whether it's using the term holistic or comprehensive, but using internal audit to canvas your whole organization. So dealing with it holistically and touching all facets of the organization and doing it in different ways that are providing value and going full circle. Those risk assessments, those internal controls reviews, the evaluation of performance, looking at metrics, getting the input of stakeholders, all those things help you fine-tune how to best spend your time doing that so that you're each year providing as much value as you can to the organization. Real briefly, just kind of this is a post-COVID, or is it? I'm not sure it's official that it's post-COVID, but basically we had a lot of changes that happened due to COVID, and really you can think of them in two ways, sort of the positive and the negative. On the positive side, we kind of were all forced to become more flexible, more virtual, more, I'll say, nimble in how we operated. And I think that was a good thing in a way for all organizations to be forced to do that. The downside of that is things probably became more inconsistent. They certainly became less documented. They probably became less controlled. And so then really we kind of have two things post-COVID. One is, to what extent have we gone back to our operational methods pre-COVID? And so we're back to what's hopefully was more documented, more controlled, or what have we decided to retain, and because we viewed them as improvements, and now have we documented those new processes, those procedures, provided training on them, so that the things that are listed here in the slide aren't the issues that we're still encountering, because these are the types of issues that we were seeing during COVID as a result of going more remote, virtual, more flexible, more nimbly. So you sort of have the yin and the yang of it, and it's really now is, okay, now that we're returning to whatever we'll say in quotes normalcy, what is our new normal, and are we making sure structure is in place, has caught up with that new normal, so that we're collectively executing in concert with that. And I think with that, we are going to go to Q&A. We did successfully leave some time for it. So Amy, I don't know if you had some identified that you wanted to pose. I could see some questions certainly coming through as we were presenting.
Yeah, we do have quite a few questions, so I can just pull some out here for you guys. The first one is, are there example policies and procedures for succession planning?
Yeah, so the answer to that is definitely yes. So there's an opportunity to look at templates for succession planning. There are a lot of really great templates out there for just how do we document knowledge, how do we identify those high-risk positions. So that would be just going through your organization and thinking about who's a sole contributor, who's been in their position for a really long time, who are people who wear a lot of hats, who are people who have a lot of connections to external organizations and partners, who are those people who know that, if something happens in one part of town, then another part of town floods, right? Those are the people that we want to make sure we document their knowledge. And those people we want to identify and figure out, how do we cross-train, how do we get those policies and procedures and their roles identified, and then make sure that we have identified, we don't have to identify people, right, but identify a career path to those roles so that when they do leave, we've got a number of folks who are potential options to take that role. And that's also thinking about, there might be people in your organization who, when they go on vacation, they never actually go on vacation. They're always on call. That's another way to think about this too. So there are absolutely templates out there to get you started, and there are policies that you can put in place that just say we want to make sure that we have a succession plan in place for every sole contributor for key leadership roles that can help you.
All right, thank you. So another question that came in is, when you identify a risk category, such as external environment, how do you further narrow down the audit on a departmental level to ensure that the risk category is addressed?
Sure. So the first thing that we do is we'll start with those high-risk areas, and we look at those risk mitigation actions, and we'll work with management to identify what the steps that we could take would be to make the biggest impact. So in some cases, that's an internal audit project. That might be an operational review, an internal controls review, or testing. In other areas, that might be things that management has to do. So revising policies, revising procedures, and then we work on, okay, what's a reasonable timeline for this? Often we do a risk assessment every 3 to 5 years. So we start out with kind of a long list of internal audit projects, and then we work to figure out what are we going to accomplish this year. We can never accomplish everything that we want over the course of 1 year, but we can usually get to our high-risk items within that first 3 years, and then move on to implementation support and other things, and then the world changes and we conduct more risk assessments, and other things kind of pop up as things move along. But we kind of follow our nose and end up following those high-risk items and checking them off the list pretty quickly.
And I would just add real quickly that, in some cases, those, per the question, internal audits are very, I'll say, department or function specific. In some cases, they're much broader. So, for example, dealing with homelessness, which are, and as you can imagine, that's a pretty comprehensive group of organization who has activities that relate to it, and again, getting those appropriate stakeholders involved in the process. But again, if you have a thorough risk assessment describes all this, then that's going to provide the answers to those questions versus, again, just having a heat map that you say, okay, again, payroll's high risk. Well, I guess you'd know that because it's finance, but why? Why is it a high risk, and what are the things that you need to do about it? What would actually constitute an activity is going to help address it. Are there any others there,
right.
Amy?
We actually are at time, so we will need to close out, unfortunately, but we do have several questions that we will do our best to follow up with the individuals after the webcast. So definitely feel free to reach out to our presenters if you have additional questions that you've thought of as well. And thank you, Colleen and Mark, for a great presentation today. We really appreciate it. If you met all CPE requirements, your certificate is available to download now in the CPE progress window. A copy will be emailed within 3 weeks should you have difficulty downloading it now. And as a reminder, if you attended today's presentation in a group and would like to receive CPE credit, you must complete the group attendance sheet found in your console. And finally, here is a link to an online survey for today's presentation. And thank you for joining our webcast. We hope you'll join us again next time. Take care, everyone.